Hey traders, Raghee here, and in this video we're going to cover some of the day trading tactics that have shifted dramatically this week as of Monday. Now, if you've been following along with these videos throughout the week, you know that we have passed the all-important first of the month VWAP support while in a yellow wave environment. What that means is in the chop that we see on the S&P and we see on the NASDAQ and on the Dow and on the Russell, in that choppy distribution market trend, we have taken out the support of the volume-weighted average price anchored to the first of the month. Now, you might remember last week in one of the free videos, I talked about the vice grip, the VWAP vice grip, where for about 5-6 sessions, we were open to two-way trading because we were in this very specific narrow window. That's actually a very difficult window to trade. If you're going to trade at all, why not know you're in a tricky part of market behavior? And also, why not decide, well, I'll kind of take it easy, use options or smaller position size to limit my risk. V tops and V bottoms are very unnatural. This is not a V top or a V bottom, gang. This is actually a fairly dramatic but pretty natural transition into a distribution market. And more of an M or a W type pattern. And that's natural, that's normal. That's the kind of price patterns that Charles Dow recognized and taught us about over a century ago. So this is not unusual, and distribution markets are very volatile. Well, you can see the distribution transition right there. And you can see the transition below the VWAP right there. So once that happened, what we did and what we have been doing is focusing on the short side. Now, I will say, and I'm as good as anybody, I think that when it comes to armchair quarterbacking myself, I think we need to be able to be tough on ourselves. And so I will definitely armchair quarterback myself and say, I could have, not on Monday, but on Tuesday, been much more aggressive about looking at the short side. But Monday was the determining day where we broke and closed below the level. Tuesday, Wednesday, Thursday, and today, Friday, this is about finding the top of the range and shorting it, sticking with the short side of the market, sticking with bearish directional bias. Now, off what levels? V-score highs, HPMR highs, clearing range, breach, retreat levels. The ES, the NQ, and the YM gave us aggressive V-score confirmations for the short. Now, it's not ideal, but it was valid. And the markets right after the open, I think, sucker punched a lot of bulls who are thinking we're gonna rally because that's what the market does, right? And so then what happened? Well, here's what I want you to come away with this video. We focus on buying the bottom of the range, right? If you're going to buy it all, we focus on shorting the top of the range. But it's ideal to know which you're waiting for, which pitch is yours. For me, right now, since Monday, the pitch is the top of the range. V-score, HPMR, clearing range, breach, retreat to the downside. Those are the types of approaches that we are focused on. And so V-scores are some of my favorites. The V-score extremes that we see that are put in place before the bell rings. Like I said, what made this one tricky is within 120 seconds after the bell rang, we hit that level. You can see here, we just bam, hit that level. And that's what set up, not the scope of the move, that's what set up the initial opportunity to get short. And those are the kind of transitions that we're going to keep into next week. Now, this is not normal price action because these aren't normal times. It doesn't matter what the market is doing. When we go into an election, we have the possibility for even more dramatic volatility. So it's not that suddenly after Tuesday things go back to normal. The market has to know who the president is going to be. Then we're going to discount what we think that means for the next 4 years. That still could entail a lot of volatility. So please be cautious. Go into diehard watch list building mode until that time comes, until we know who the president for the next 4 years is going to be. Stick with these short-term time frames. They've been very productive. Realize that we're in a choppy market. It's going to be a little bit more difficult to trade, but by and large, gang, I'm going into next week on daily time frames pretty darn bullish. I'm going to talk more about that in the premium video. And another thing to keep in mind, it's okay to go into watch list building mode until about Wednesday. And that means that I'm going to be looking at daily time frames, looking for relative outperformers. And I'm getting very interested in some setups going into November. If you're interested in what kind of setups I'm looking at, this past Wednesday, I did a webinar on my options tradings on ETFs and the stocks that are heavily weighted within them. You can check that out free over at simplertrading.com/easy-replay. So you can check that out, see what I'm doing to build my watch list, what I'm going to be doing going into November. Super excited about the possibilities that lay ahead. This is a distribution market, gang, and we're heading down towards some oversold levels. As we're getting through this window of the election, I think we can see some really interesting opportunities as we go into after the election into November. All right, gang. Have a great weekend. I'll see you in the next update.